Hello and welcome. My name is Oscar and I'm from the Finance Society at Stockholm Business School. This is episode 2 in the Technical Analysis lecture series. Episode 1 was about how to read the charts. We went through the line graph, the bar chart, and the candlestick chart. So today I thought we were going to talk about what is technical analysis, more from scratch. So we start off with, here's the definition that I wrote about technical analysis. Looking at historical data, we try and find price pattern and market trends to attempt to read the market beforehand. So we try and find price pattern and market trends that we know by experience. When these patterns occur, it usually goes this or that. So we know if this pattern appears, then we should go long, because 7 out of 10 times it goes up. Another very important thing that you have to understand in technical analysis is the correct price for the company is what it was last traded at. Is Twitter was traded at $40, it's worth $40. We don't do any extensive analysis of the company in detail, so we don't go looking into how is the financials looking, how is the product, what is the staff or the board, is it a good board, is it a bad board, because it's already priced into the price. That's why it's trading at 40, and if there was a better board, maybe it would be trading at 45. So we don't really care about the company itself, we just want to trade the emotions of the other traders. Yeah, so why is technical analysis looked down on? When you say that you're a technical trader, a lot of people will say, like, you're just a hoax. It doesn't work. You need to know the fundamentals. And I agree. You should know the fundamentals, because there's a lot of information in the fundamentals. But I think the picture people have of technical traders, the stereotype is it's someone who want to get rich very quick, someone who thinks it's very easy to trade the market, easy to make 50, 100, 200% a year. That's a stereotype, and I think it's pretty accurate. There's many new technical traders who think it's easy. It's just work 10 minutes a day, then you go down to the nightclub and just party all night. I think it all comes down to who you learn your analysis from. In the fundamental analysis, you learn it from your university. You learn it from your employee. You got good, stable institutions from where you learn the correct analysis. While technical analysis isn't as widespread. If you Google, I want to learn technical analysis, you will find some decent informations like Baby Pips, Investopedia, and such. But if you want a more hands-on video tutorials, there's mostly a subscription-based, like a chat room. You pay $50 or $100 a month to be in this chat room, or learning from their videos how to trade. And some have good informations, but some are not good. And these are the ones saying that you can work 10 minutes a day, make this much money, it's easy, everybody can do it, buy this very, very risky binary options, and you can make this much money. Well, you can make that much money, but you can also lose everything you own and more in the process. So there's a lot of unhonest people out there who don't want to help you and just want to take your money. Many of these subscription services, they just want to make a quick buck, make a video tutorial, takes a week to do, and then lure as many gullible people as possible to get into these subscription services, and doesn't work. Trading the technicals is hard. I would say it's as hard as doing the fundamentals correctly, because the fundamentals, it's more set in stone. But you still have your own rules. If you want to buy something at price earnings 10, or you want to buy it at 20, what is your rules for the fundamental analysis? Same as with technicals. You need to know which patterns you like, how you want them to look. As I said, I think it's important to remember who taught you your analysis. Because if you say to someone, let's say you talk to your friend, I learned this analysis from my university or my employee, the fundamental analysis, people are not going to question what you learned from university as much as I learned this from a guy on the internet. He lives in Dubai, let's say Dubai. It just looks more sketchy than learning it from an institutionalized source. And also why I think technical analysis is looked down on is, why does it work? Because what you do is you look at old data and you try and predict the future. And no one can predict the future, because if you could, you would be the richest and most powerful human being. But why does it work? Because we are... I stole this picture from trustablegold.com. With the technicals, you can read the investors behind the screens or the other positions, and it's a battle. You want to be on the correct side. So with the technicals, I believe you don't have to agree with me that you can understand where in this wheel we are. So if we're at the euphoria, maybe we should start shorting. So when people start getting frightened, they will start selling, and when they start selling, panic arises. And when panic arises, it's just going to crash. And it's the same thing going up when the market is at its low. Finding lows and highs is very, very, very hard. But with the technicals, you are, as I see it, able to read where you are in the cycle. Because history likes to repeat itself. There's all the crashes and booms that we've had. Just the recent IT boom, was that fundamentally sane? I don't think many would say that. Just because you have a website, your company is worth millions of dollars. Because again, human emotion is very strong. Same thing with the recent crash. As soon as the market tipped over, it was panic. And we can play on the human emotions, and that's what we do when we trade technically. We just trade the people and not the actual stock. In the technicals, as I said, you believe that the market price is the correct price, so you don't look into the company. So when you trade technically, you don't really need to know the symbol of the stock. You don't need to know if they do oil or phones or clothes. Doesn't matter. You just look at the chart, and the chart will tell you what to do. Of course, it's always good to have more information, but you should, if you just want to trade technically, you don't need to know what they do. The best thing to do, I think, is to know both and do your analysis both technically and fundamentally, of course. But as a technical trader, you don't care what the company does. It's just all about the chart. To end this episode, I would just like to thank you for your time. This was quite difficult presentation to do, because it's just a bland PowerPoint presentation and me talking. The next episode, I'm not 100% sure what we will do, but we'll start getting into moving averages, different indicators on how to read with the candlestick charts, how we can read the charts, and what is an uptrend, what is a downtrend, how can we find these trends. And they will be more interesting, I would say, than the presentation today with just still slides of my text. So hopefully the next presentation will be more fun for you. but I think this gives important information about what is technical analysis that you might not know already. So thank you for your time. Merry Christmas and a Happy New Year. And I see you in 2015. Have a good one. Bye.